live recording. It's just me today, just Ted. I'm not joined by any guests or by Johannes. It's Sunday, August 10th, and I hope everybody's having a fantastic weekend. Purpose of today's session is to share with you a recent report that we've published last week on the topic of Bitcoin strategies for corporations. It's available for download on our website, and you can find some demo materials on LinkedIn as well. I'll make sure that in the description we share the download site location. But with that, I'd just like to kind of step you through some of the key elements of the report itself. Let's go for it here. All right, so the focus here is talking about trying to apply a classification system or a taxonomy to the emergence of Bitcoin Treasury companies, so-called Bitcoin Treasury companies. We've often heard Michael Saylor and others talking about how there's now 160 or so publicly traded entities that have disclosed that they have Bitcoin holdings on their balance sheet. And what we've wanted to do here at Orange Wheel is to kind of open that group of 150 companies up in a bit more detail and understand really what the different strategies being applied are, what the motivations are, what the accumulation methods are, and other key distinguishing factors, ultimately to help kind of bring some level of sophistication to the community in terms of how we discuss and analyze these companies and really understand them, so that we can also take those learnings to a broader audience to make sure that we're as accurate in our descriptions as possible. There's also a bit of an outlook where we as Orange Wheel kind of take a look forward into the next few years and provide our perspective on where we think the different segments will sort of go. So with that, I'll just go to the next slide. This is very text heavy, but I'll just kind of read through some of it out loud, just for the audience to kind of get a handle on what the objectives of this report really are. As mentioned, there's this rise of so-called Bitcoin Treasury companies. It's drawn a lot of attention and media coverage, often clustering all these participants, these 150, 160 some odd businesses, into one single category. And you'll frequently also hear them described sometimes pejoratively as MicroStrategy copycats. However, this emerging phenomenon is far from monolithic. Public companies holding Bitcoin on their balance sheets do so for what we believe to be a wide variety of strategic, financial, and philosophical reasons that warrant deeper examination. This report aims at bringing greater analytical clarity to the corporate Bitcoin adoption landscape by applying a structured taxonomy to these companies. We seek to differentiate among varying treasury strategies, and in doing so, provide a more nuanced lens through which investors, analysts, and decision makers can evaluate these initiatives. We recognize that this taxonomy is neither exhaustive nor static. The corporate adoption of Bitcoin is a young and rapidly evolving trend, with motivations and implementations still taking shape. Our categorization should be viewed as a starting framework, one that will inevitably evolve alongside the market and our understanding of it. We hope it sparks constructive dialogue, enhances strategic comprehension, and even informs the thinking of companies that have not yet considered Bitcoin adoption as part of their broader treasury or innovation strategy. Notably, many companies could reasonably fit into multiple of these categories. In such cases, we have made a judgment call as to which of the most prominent characteristics would apply them into one of the predefined categories. As new disclosures and actions emerge, we expect company classifications and company positions within those classifications to shift. The source of information and the scope. The primary source was bitcointreasuries.net, which is a fantastic site for user-sourced information on the Bitcoin holdings of the various public companies, as well as private and government entities. We took the top 150 companies by Bitcoin holdings, and this effectively took us to companies that had non-zero holdings. There are an additional 10 businesses listed as of August 4th, 2025. However, these entities appeared to have zero Bitcoin or zero known Bitcoin on their balance sheet. Some of these companies did have Bitcoin, but then had divested, for example. And then where necessary, we also supplemented this data source by going into companies' press releases and other filings to get additional communications from those companies to give additional flavor and context for the strategic rationales. This focused exclusively on public companies. I think we recognize that there are a large number of private companies that have some degree of Bitcoin in savings. However, we don't have a comprehensive viewpoint on these businesses, and I think in many cases they will be small and medium-sized businesses that are typically just saving some degree of their retained earnings in Bitcoin. So for those purposes, to have kind of a comprehensive view and to be consistent, we've looked exclusively at the public companies. Again, the top 150 public companies, which goes straight from MicroStrategy down to companies with less than one Bitcoin on the balance sheet. So this is just kind of the high-level view in terms of the number of businesses reported with Bitcoin holdings. And we can see that prior to 2020, before MicroStrategy joined, there were only three other businesses that did have some amount of Bitcoin acquisitions at that time. In 2020, that number jumped up to 10. In 2021, up to 19, 2022, continue to grow. And we can see that, going into 2025, we entered the year with about 84 companies coming into 2025. And already 7 months into the year, we're up to 150. So nearly doubling in a 7-month period. On average, 10 new companies per month since 2024. And I think that number is only going to continue to increase as we go into the second half of this year. And then collectively, these companies hold nearly 1 million Bitcoin collectively. Now, of course, the concentration of that is a different picture, and we'll see on the next slide here. Oh, not this slide, but the next slide. But if we look at these 150 companies, what we're trying to do is kind of take this broad set of companies with Bitcoin on their balance sheet, or what have been called to date Bitcoin Treasury companies. I'm using the term Bitcoin strategy companies, and then distinguish them into 4 broad sets of categories here. And again, this is not the most MECE structure, but it's been based really on identifying the characteristics and commonalities that we see empirically in that set of businesses today. It's not a normative classification. So as such, you'll see, a bit of a mix between, strategies, accumulation methods, sectoral focus, etc. But this is kind of the best characteristics that help to classify these companies today. So the first one we're calling capital aggregators. So these ones, by and large, are companies' primary Bitcoin accumulation methods involve direct access to the capital markets, raising fiat and buying Bitcoin with that fiat. And then within that, we can have a subset of 3 elements. So we have the ones that really the financialization engines that are really succeeding in this at scale, and then are able to accumulate further Bitcoin potentially through options trading strategies, for example. And Strategy, Metaplanet, these are businesses that fit into this category. Now, they still have operating businesses to some degree, but these are by far not the main focus for the business, nor are they the mechanisms by which the company is accumulating additional Bitcoin. Then we have, and I hope this is not taken pejoratively, but we have a second subcategory here called opportunistic followers. So these are companies that may or may not want to really drive the become financialization engines within their own markets, but to date, at least, haven't really demonstrated that they have the scale or focus to be able to really do that. But they have, to a certain degree, tapped the capital markets. They have done at least one capital raise for the purpose of buying Bitcoin. And that is at least communicated to be their primary focus for their company vis-a-vis their operating business that may or may not exist. And then I think within here, there might also be companies that maybe don't believe that they'll really succeed at becoming the same scale as a Metaplanet within their own jurisdiction, or relatively same scale within their own jurisdiction, but do see this as an opportunity to raise pretty cheap capital in any event, and are sort of saying, why don't we add this to complement our existing business strategy? And again, I think some of these companies might prove that they are going to be leaders within the respective markets with time and may move from the opportunistic followers into the financialization engines. So that's a little bit of a blurry line between those two subsegments. And then the last we have is strategic allocators. So these are companies that, yes, they have raised fiat capital, bought Bitcoin, but they have also indicated that at some point in the future, their mechanism by which to accumulate additional Bitcoin per share growth may involve investing in other businesses or providing additional services. So we see these companies as, doing something different than strategy, different than Metaplanet, and kind of looking a bit more into fulfilling additional kind of financial services or investment services with a Bitcoin lens at play and with a focus on driving Bitcoin per share growth. Moving on to category 2, a little bit more straightforward. These are Bitcoin miners. So companies that accumulated, well, they own mining infrastructure and they create new Bitcoin. And then we've kind of put in 3 subcategories here. So we have ones that are, saving their retained earnings in Bitcoin. So they may still be financing some of their capital through fiat and also their operating expenses. It might be paid for by fiat loans. I think in general, there's this trend in the mining sector, Bitcoin mining sector, where historically they would see Bitcoin as a product that was to be sold to cover expenses. And now they see Bitcoin as the end game. So they are, to the extent possible, financing all of their OPEX and CAPEX with fiat and saving in Bitcoin. And then the companies that kind of go above and beyond that go from kind of passive saving, so saving the retained earnings in Bitcoin, to actually doing additional active accumulation through, again, tapping capital markets. So we see Marathon as an example of a company that is doing this as well. So sort of combining the capital aggregation with Bitcoin mining. And then we have a third category here where Bitcoin mining is not the core company's business. It is a auxiliary to the core business. So we see companies that are already active in the energy sector that are now, they might have waste or low cost or stranded energy. And they see it as a means by which to accumulate an additional revenue stream. But even these companies, I think, are realizing that they might want to hold on to the Bitcoin rather than sell the Bitcoin that they earn through the mining. Moving on to section 3, this is a bit more of a sectoral focus. What we're seeing is that there are companies that are already in the crypto or Bitcoin ecosystem, providing services, financial services, or infrastructure services. So these are talking like crypto exchanges, brokers, payments providers. So these are companies that are already familiar with Bitcoin and crypto. And they may also be generating some of their revenue in the form of Bitcoin or crypto assets. And so as a result, already are, by virtue of their operations, accumulating some degree of Bitcoin that could be accumulated rather than sold back into fiat. And then we kind of split this into companies that are Bitcoin only services or infrastructure, ones that are more broad crypto, and then ones that are maybe even further out from that, but into the kind of more broader fintech space. Fewer of those exist than what's the most popular here is definitely in the crypto and blockchain subcategory. And then with that same sectoral focus, we have another thing we've called adjacencies. And these are ones that are not in crypto or blockchain or Bitcoin, but are in industries that are kind of adjacent. And so we see ones that are a bit more tech focused. So Web3, gaming, gambling, esports, and AI. And then we have one that's a bit more old school, which is metals mining companies. So these are adjacents, but in kind of different directions from Bitcoin. The Web3, gaming, and AI, it's kind of like, I think there's a forward-looking perspective that there will be value transfer within the digital ecosystems that they're building, and that AIs will transmit value between themselves on Bitcoin or on crypto assets. So some degrees of integrations are expected to happen in the future, and their Bitcoin accumulation purchases tend to be about aligning with that kind of future reality and demonstrating forward thinkingness. On the metals and mining side, it's a bit different. It's really about risk management, hedging against the types of risks that they would typically have in the mining industry, especially junior front-end exploration. And this is actually a report going deeper into this subsegment, the subcategory that'll be released next week. So look for that one to hit our website and hit LinkedIn soon that dives deeper into these companies. And then the last one is a bit more broad, but this is treasury management for operating businesses. So these are companies that have an operating business that will remain to be the core focus of the business, but then have complemented that with a Bitcoin strategy to a certain extent. And here we see a bit of a maturity curve evolving. The first one we call kind of a strategic hodl position. So this is companies that have kind of done one purchase and have kind of sat on it for a long period of time. So they have done that kind of initial view, and it's kind of a test the waters, put a toe in the water, a relatively small amount compared to the size of their business. Tesla is a company that kind of fits into this category. They made a purchase several years ago, which has fared them very well in terms of its valuation increase, but they haven't really made a move since then. So that's a bit more signaling to the market, testing the waters, taking that first step to get familiarized with what this really means for a business to do. From there, we see companies can move to a next stage of maturity, and they might enter at this stage of maturity as well. They don't have to go through that first long-term initial purchase, but then they can move to an active balance sheet management. And here they are accumulating Bitcoin on a regular basis with their retained earnings from their business, with the cash flows they're generating from their core operating business primarily. And they might even do some divestments. They might try to kind of say we have a certain target in terms of how much Bitcoin we want to have relative to other liquid assets and relative to the free cash flow of the business, and maybe different criteria. So this is really an active treasury management strategy to juggle the different variables, but include Bitcoin as one of those assets into the portfolio. And then we have a third one, and this is a really broad category, and I think there's a lot of maturity even within this space, but we say moving beyond that into a more Bitcoin standard type thinking, right? And very few companies, I think, have really moved it to this level yet. But here we start saying, okay, what can we do with Bitcoin? First of all, is Bitcoin going to become our primary reserve asset, not just one of many, but actually all excess cash, or at least a significant portion of excess cash being stored in Bitcoin. And then above and beyond that, integrating Bitcoin into other aspects of the business, potentially into payments, payroll, accepting Bitcoin from their customers, paying their suppliers, raising capital using Bitcoin or hybridized instruments, applying a Bitcoin standard when thinking about capital allocation, so applying Bitcoin as the hurdle rate, thinking about Bitcoin mining as well in terms of what the degree to which that company may or may not be in the energy sector. So that's a bit of a more broad kind of catch-all, but I think we're going to see that one maybe open up into a multi-dimensional perspective of the different types of additional ways to apply Bitcoin to the business besides the treasury side of things. So that's the classification for now. It's not perfect, but it's a good starting point and a place to spark discussion and interest, hopefully from other parties. I'll go through just a few more pages of this report today, but then I'll encourage you to download it from the website to get the full details. But here we have a little bit more of a quantitative breakdown, where we can see the number of companies on the left and the holdings by company on the right. And we see, roughly 25% of the companies are these capital aggregators, 25% are treasury managers for operating businesses. And then the other 50% is made up of the kind of sectoral adjacencies and service providers, and then the Bitcoin miners. But if you looked at the holdings, it's a much more pronounced observation, which is, of course, the capital aggregators are the ones that have the lion's share of the Bitcoin, so 80%. And then within there, strategy has 96%. So really, strategy is the company that really is dominating the space, having more than 3/4 of all the Bitcoin of all public companies. And then you have Metaplanet, Sequan, Smarter Web Capital, and a few other firms making up the other 4% here. And then we have the miners and service providers as other major ones. And so actually this 40 companies here of treasury managers make up only 2% of the Bitcoin holdings. I think without jumping to the conclusions yet, I think what we're going to see is this treasury manager segment, so ones where we have operating businesses that are complementing that with the Bitcoin type strategy, will probably be the segment that grows the most over the coming months and years. And within the capital aggregator category, I do think that the financialization engines are going to be the ones that really, that within each jurisdiction, there's going to be a winner takes most kind of fallout. And what that means is that the means by which to grow Bitcoin per share for your shareholders exclusively through capital raises will diminish quite rapidly over time, I believe. I think there'll be a few entities that will continue to do this for, maybe several years, Strategy being one of them, Metaplanet most likely being another, and then a small subset of additional companies. But that kind of land grab focus will kind of be occupied and won effectively. But the companies that move more into the strategic allocation will be another subsegment that we think there's going to be a lot of additional opportunities for companies to go and apply, redeploy capital into operating businesses, take those companies onto a Bitcoin standard, and by virtue of different capital allocation and different management of the free cash flows, be able to acquire Bitcoin per share growth at a rate better than what Bitcoin, just simply buying Bitcoin would have produced for the equity holders. So that's another subsegment that we think we'll see some interesting innovation and diversification over the coming years as the pure strategy, the MicroStrategy strategy, sort of ends up becoming a one game, I guess, as that land grab kind of ends up being finalized. Okay. In the report, there are more details on each of the segments and subsegments, where we talk again about the descriptions, rationales, interactions with the operating business, accumulation mechanisms, and so forth, as well as some kind of facts and figures in terms of the holdings for each of these subsegments and subcategories. And then we have our outlook here on one of the last pages. So that's the report. I encourage the audience to download it from our website, familiarize yourself with the information, reach out if you'd like to discuss. If you agree or disagree with any of the perspectives that we've kind of taken, happy to sharpen our own thinking with other thought leaders in the space. And really, I think we're all humble enough to say that this is a paradigm in corporate finance, and as such, I don't think anybody knows for certain the way that everything's sort of going to play out. But I think what we can all agree on is that it's extremely fascinating. It's going to create a lot of new ways to think about the world, and it's ultimately going to be very bullish for anybody who is into Bitcoin, who understands Bitcoin. And I think this is also going to be a way to orange pill more and more people and to kind of bring them into the fold as they see an increased number of businesses apply these really novel and forward-leaning strategies. So with that, I wish everybody a fantastic remainder of their weekend and look forward to hearing more from